In our previous videos, we were seeing simple final accounts problem. Now we are going to work out final accounts with simple adjustments. The problems are: prepare a balance sheet as at 31st March 2000 from the following information of ABC Limited as required under the Companies Act 1956. Now I just read the particular and its categories. Categories means under which heading it will become. Term loan. If any loans or debentures are given, it should be comes under long-term borrowing, as it said in my last videos. Creditors means trade payable. Advances comes under short-term loans and advances. Next, cash and cash equivalent. That is assets. So we are writing under this the current assets. Staff advances. Once again, it comes under short-term loans and advances. We will write provision for tax and short-term provision in liabilities. Next, security premium. We can enter it under reserves and surplus. Then loose tools. Loose tools means movable equipment that are to be used various tasks in our business. Anyway, it comes under assets and inventories. After that, investment given, it will be shown in non-current investment. Next, general reserve. Of course, it will be enter under liabilities. Capital work in progress. Capital work in progress, which means we are using our raised capital to any new projects that are not yet completed, like building construction work, software installation, like that. Next, loss given for the previous year. It is to be deducted from general reserve. Why? Because that losses, any losses, if we are occurring, if we are suffering, we are compensate that losses out of reserves. So we are deducting that losses from general reserve. Then debt are given. It is comes under trade receivables of assets. Loan from directors, it comes under short-term borrowing. Provision for doubtful debt, it will be deducted from debtors under trade payable. If any doubtful debt given, if any new doubtful debt given, it should be added with the debtors. If any new doubtful debt given, it should be added in the debtors. Then stock. Stock is nothing but inventory. Next, fixed asset. In our problem, depreciation has already deducted, so no need to calculate separate calculation for fixed asset. Next, finished goods means inventory, stock related entry, so it will becomes under inventory. Next, let's start to work out adjustment entry. Here there are simple adjustment given, that is 30,000 equity shares at ₹100 each, and 10,000 10% preference shares at ₹100 each. Both will be entered in balance sheet in the share capital. Then term loan is secured, which is already taken. Next, depreciation. Of course, it comes under fixed asset, but we won't taken this. Why? Because it was already deducted from fixed asset. That fixed asset amount rupees 51,50,000 has already deducted amount, so no need to further deductions. Now, I have prepared notes for balance sheet. As for balance sheet pro forma, first we need to calculate share capital. There is equities and preference share capital. There is equities and preference share capital given. That is at ₹30 lakh and at ₹10 lakh. Both to be comes under note number 1. Second note is reserves and surplus. Security premium at ₹4,75,000 and general reserve ₹20,50,000. Together it gets ₹25,25,000. Then losses given at ₹3,58,000. Here I have deducted this from the reserve. Why? Because that loss would be compensated from the reserve, as I said already. Third note is long-term borrowing. Term loan at ₹10 lakh. Fourth note is short-term borrowing. Loan from director at ₹2 lakh. Fifth note is trade payable. Creditors at ₹11,45,000. Sixth note is short-term provision for tax at ₹1,70,000. For tangible asset, I have fixed asset. I have given fixed asset in note number 7. Eighth note is capital work in progress ₹2 lakh. To non-current investment, I have given investment ₹2,25,200 in note number 9. Under 10th note, I was written sundry debtor. After that, we will deduct old provision for doubtful debt, ₹20,200 from the debtor, 12,25,000. Once again I repeat guys, we have to deduct old provision for doubtful debt from 12,25,000, 12,25,000 minus 20,000. For inventory, finished goods rupees 7,50,000, stock rupees 4 lakh, and loose tools rupees 50,000. In total, we are getting 12 lakh, and it will be comes under note number 11. Last but not least, short-term loans and advances. Advances rupees 3,72,000. Staff advances rupees 55,000. Both together rupees 4,27,000. Enter in note number 12. Let's work out balance sheet as per revised schedule, guys. Here I'm giving ABC Limited balance sheet as on 31st/3/2000 as in the heading. First, we will focus on equities and liabilities under the balance sheet. Under liabilities, I have shown share capital rupees 40 lakh and reserves and surplus rupees 21 lakh 67,000 respectively. As per pro forma of balance sheet, non-current liabilities comes under liabilities under long-term borrowing rupees 10 lakh, and current liabilities are short-term borrowing rupees 2 lakh, trade payable rupees 11 lakh 45,000, and short-term provisions rupees 1 lakh 70,000. And there is no entry was given for the current liability, other current liability. So I have put just nil in that column. If you add these three categories, you will be getting rupees 86 lakh 82,000. Next, we'll look at assets. In assets, it always has two categories: non-current asset, current asset. Non-current assets are tangible asset rupees 51 lakh 50,000. There is no intangible assets enter in our problem. Next, capital work in progress and non-current investment rupees 2 lakh and 2 lakh 25,000. For current asset, trade receivables rupees 12 lakh 4,800, inventories rupees 12 lakh, and short-term loans and advances rupees 4 lakh 27,000. I have shown cash and cash equivalent, cash and cash equivalents in balance sheet. In balance sheet rupees 2 lakh 75,000. Next, no other current assets has given on a problem, so I have put just nil in that column. Anyway, if we are adding these two main categories, that is non-current assets and current asset, we will be getting rupees 86 lakh 82,000.